Okay. Hello, everyone. A very good evening and a warm welcome to all of you. The topic of today's webinar is undoubtedly crucial for the survival of the banking industry, which is irreplaceable pillar of the financial system of our country. The Indian banking sector has experienced considerable growth and change since 1991. With the rapidly growing banking industry in India, frauds in banks are also increasing at a very fast rate, and the fraudsters have started using innovative methods. Therefore, there is an indispensable and critical need for early detection of cyber frauds in the banking sector. On this note, I would extend my sincere gratitude to the Digital Accounting and Assurance Board of ICI, which is persistently and ardently making its valiant attempts to make its members informed about such distinctive subjects. The board aims at upgrading the skills of the members of ICI and empowering them by conducting various virtual CP meetings and countless webinars. Currently, the board is working under the guidance of CA Charanjot Singh Nandaji. I am always short of words which can truly suffice the magnanimous and splendid personality of CA Charanjot Singh Nandaji. CA Charanjot Singh Nandaji is a Central Council member of ICI. Besides being the chairman of Digital Accounting and Assurance Board, he is also sharing his knowledge through chairmanship of various committees of ICI, such as Committee on Financial Markets and Investor Protection, Committee on Information Technology of South Asian Federation of Accountants, and Board of Internal Audit and Management Accounting. In the past, he has also been the chairman of various other committees like Internal Audit Standards Board, Committee on Management Accounting, Internal Audit, Members in Industry, and Women Members Empowerment Committee, among several others. Additionally, he also contributed to our profession as the guest speaker at the British Columbia chapter of ICI in Canada on IFRS, Effective Communication, and Forensic Accounting seminar. He has also contributed as a guest faculty and program coordinator at various seminars and conferences organized by international bodies and ICI. With that, I would request CA Charanjot Singh Nandaji to say a few words and address today's session. The dice is all yours, sir.
Thanks a lot, Kaveri. I am truly honored to be amongst all of you. So starting my salutations from Mr. Arunesh Kumar, who's the speaker of today's session, Mr. V. Somashekhar, the secretary of the board, CA Amit Gupta, the moderator of the day, CA Kaveri Arora, technical support IAs, and all who have joined here to go home on enlightened. Ladies and gentlemen, you are all aware that the Institute of Chartered Accountants of India was set up an Act of Parliament way back on 1st July 1949, when the most important document to the democracy, the Constitution, was not adopted. You are all well aware that the Constitution to this great country was adopted on 26 January 1950. The pertinent question that arises is, what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India when their own democratic setup was not in place? The answer is very candid, very simple, very forthcoming. They were looking for a disciplined band of soldiers to steer this country out of confusion, to put it on a perpetual path of success and progress. And ladies and gentlemen, there we are. We are the financial soldiers of this great country. With changing times, we have changed our prepositions and roles. From financial soldiers, we have become technical soldiers. With the advent of technology and the way technology is misused by certain strata of the society, unscrupulous people, it becomes imperative on chartered accountants to go ahead and create value and worth and show their valor in ensuring that these white-collar crimes be stopped Ladies and gentlemen, today's program on early signs of cyber frauds in the banking industry is a call in this direction. I would like to tell you that we met Reserve Bank in Mumbai. They were very keen that the institute has a bigger role with relation to all system audits which are being held in the country, which are being done in the country, either by CAs or non-CAs. They are very keen that cyber aspects be closely monitored by chartered accountants to ensure that there are no cyber frauds. And moving on those lines, we thought it fit that the entire membership could be enlightened on early detection of cyber frauds of the banking industry. This early detection will ensure that the losses which penetrate on a larger pockets are limited. The basic impetus is to ensure that we have our professions understand how they have to immediately smell any sign, any early sign of cyber fraud, and then report to the rightable people. It is also important that we, at our level, take corrective actions to ensure that things move in the right direction. So, ladies and gentlemen, for this we have two very reverend speakers, Mr. Arunesh Kumar and Mr. V. Somashekhar, who will take you through the entire genesis, how to ensure that cyber frauds are in the way. Not speaking much, I would return the dais back to Kaveri. Kaveri would take you to the introduction of the speakers, and then things should follow. Thanks a lot, Kaveri, for inviting me, and thanks a lot for a wonderful introduction which you gave. God bless you.
Thank you so much, sir, for your wise and enlightening words. It has always been a pleasure to learn from you. Also, a very big thank you for organizing this webinar on such insightful topic, which is the need of the hour for all the members of ICI. Today's webinar seeks to aware us about the early detection of cyber frauds in the banking sector. And in this regard, we have two wonderful and experienced speakers with us to address the same. Without any further delay, I take the privilege to introduce the first speaker for today's session. A senior consultant in banking SME department with Vegans Learning Private Limited, Mr. Arunesh Kumar is also a freelancer trainer, program designer, and content developer. He has vast experience of 33 years as a professional and practical banker. He was a bank branch head for over 20 years at as many as 8 branches in 4 different states of India, wherein he worked in every walk of banking, including credit and vigilance administration. In the past, he was also an eminent faculty at National Training Institute of Bank of Baroda. Arunesh Kumar has been a trainer in diverse domain subjects, including credit appraisal beyond financials, usage of early warning signals, prevention and timely detection of frauds, and forensic investigation of financial frauds, amongst various other subjects. Additionally, he is a visiting faculty at various institutions such as National Institute of Bank Management, Reserve Bank of India, Central Bureau of Investigation, Gujarat Forensic Sciences University, and Institute of Chartered Accountants of India. I am honored to welcome such a distinguished speaker who has a strong hold and vast practical experience on today's topic. Over to you, sir, for taking the session forward.
Thank you, Kaveri. CA Kaveri, ma'am. Thank you, Charanjit Singh, sir. President Chairman, DAAB, ICAI. Thank you, Amit Gupta, sir, for inviting me for this forum. Welcome to one of the most challenging tasks concerning the financial sector, not only in India, but globally till today. So, Kaveri ma'am, can we start with the presentation or we have to wait for some more participants to join?
No, sir, we can start. We have a lot of participants already joined.
Okay, so can we start with the presentation?
Yeah.
Just a minute. Huh? Right? Is it visible to all of you?
Yes, sir. We can see your screen.
Okay, then whether it is showing full screen or
Yeah, full screen. We can see that.
we can continue with it,
Yeah, perfect, sir.
right? It is okay now?
Yeah.
Okay. So let me start with the note of thanks to Chairman Mr. Nanda sir, Amit sir, and Kaveri ma'am for moderating this very, very significant and interesting program. As I said, this is the most challenging task as of today, not only for India, but globally. It is indeed a proud and honored moment for me to be here before such an august house being attended by a large number of reputed chartered accountants all across the India. I am thankful to the Institute of CAs, for giving this opportunity to present a deliberation on such a subject which once became talk of the town. We remember the year, if I am right to my memory, it was in 2013 and 14 when NPAs were mounting just like anything and increasing at fast pace. The regulators were not finding the way to address the concern of the country. Then during that time, in May 2015, RBI came out with a communication heading like that, subject with subject, framework for dealing with loan frauds. This was just game-changing directives by our regulator. 2-3 very prominent aspects were covered in that. One was the early warning signals and then red flag accounts. These were introduced for early detection and reporting of frauds. Lot more was there in that communication. So today, my subject allotted by ICI is early detection of financial frauds. As a layman, if we talk about the frauds, basic, very simple definition of fraud is wrongful gain, wrongful loss. The one who is not deserving for that gain is getting that, and one who is not going to lose, losing that. So, as far as detection and reporting of financial frauds is concerned, before that, I will take 2-3 more minutes talking about prevention of frauds. See, credit starts with appraisal, followed by compliance, monitoring, and then recovery till final closure of the account. These are the 3-4 stages of a credit. As we know, as a banker, and particularly this group of chartered accountants, they know credit is a very, very sensitive dynamics and area in banking sector. Recently, RBI has come out with financial stability report, and the data shared therein is very encouraging and giving a sense of feeling that the efforts of last 8 years have now come into results. I will start this session in this background because this communication, which has been recently issued by RBI, very much related with my subject of today. As our moderator ma'am has said that questions and queries from the audiences will be attended before concluding the session. I will request respected moderator to keep enough time for that part.
Sure, sir. We'll do that.
Yeah. Since time is very short, I will go in brief initially. Then we will discuss some cases in detail. One more submission that during the session, we will be referring a few live cases and will try to understand how these lapses could have been avoided, timely detected, and public money could have been protected. So, what RBI's financial stability report is saying now? It says that to create a wide set of early warning indicators, as I said before, in 2015, RBI came out with that circular, including early warning signals and directions for red flag accounts. At the time, RBI suggested 45 odd early warning signals. All were varying and depending upon stage to stage of the credit movement or credit journey. Now, when RBI repeatedly now again is repeating that, it is said in this communication that early warning indicators in the works to assess stress in financial sector. As per this report, our in position of NPA and NNPA and GNPA, gross NPA and net NPA, is very, very comfortable now as compared to 7 or 8 years back situation. And for next financial year, it has been expected to be more improved and better data we will be showing there. Now, RBI says that India will create a wide set of early warning indicators to assess any developing stress in the financial sector and take quick remedial measures. This I am just trying to give a background of the subject so that we can have a fair opinion and fair knowledge sharing of detection of financial frauds. To capture information from the financial markets, global markets, and the economy, India will create a wide set of early warning indicators to assess any developing stress in the financial sector and take quick remedial measures. This will be including whatever observations are made from the financial market, global market, and the economy. It will be in addition to the set of early warning indicators released by RBI. It will further enable the government to take corrective measures in time. Means early warning signals is a tool which we can use at the first stage of the credit also. See, when we were conducting program in my parent institution for forensic investigation, this came to our mind if we can apply those tools at the time of appraisal of credit. Now, CS can sponsor and promote this idea, and we conducted many of the programs on financial appraisal with forensic purview and forensic viewpoint. And those programs were very well attended. So even in the 45 odd early warning signals shared by RBI, most of them, when we have undertaken a study, most of those early warning signals were applicable at the time of appraisal. Appraisal has two parts. One is the financial appraisal and one has a non-financial appraisal. So what happens in banking so far, we were focusing on financial appraisal, whereas non-financial appraisal is more significant, more important, and more logical before taking a credit decision. It is to get a sense of the stress. Means by following those early warning signals, the regulator as well as government will be able to understand and get a sense of the stress. This I will like to deviate for a moment. This CA's role, particularly auditors who are working as an auditor, it may be internal or external, because lot many institutions have engaged as their employee. chartered accountants are there working in the payroll. And concurrent auditor, statutory auditors, stock audit, and so many are there. They are being means allotted and assigned to outside auditors also. So there are two types of audit in the banking: internal audit and the external audit. Apart from detecting financial frauds, auditors support their customers in many other ways. I will take one example. Miss A switched bank to consolidate debt and lower its interest rate. Say, when we are appraising a credit, when we are monitoring a credit, at both the times, we are at such a position that we can guide to our borrower to keep the health of his or her credit portfolio healthy and intact. Bank pointed out that her company's day in receivables were some 15 days longer than the industry average. Means the line of activity which she was following was having an average of book debt period, days in receivables, around 50 to 52. Whereas she was having the average period of collection 65 days for decades. When it was brought to her notice, she said, no way. Our collections have been around 65 days for decades, and my parties, my clients are not going to make payment. But finally, bankers could convince her, and she followed the suggestions given by the bankers, and her average receivable period came to 54 days. So now what I mean to say here, why I am taking this example, the financial management leads to health of borrower in retaining the asset to standard as against detecting the sickness and fraud. So what happened by this exercise? When she is able to recover her dues 10 or 15 days in advance, her cash flow was improved. When cash flow was improved, she was having a surplus cash in her hand. So she has the closer cycle for rotation of funds, which could in expanding the business and otherwise also in retaining the health. So why I am referring this case? Because when you are conducting audit, particularly when particular one or two accounts are assigned to you as a stock auditor or concurrent auditor, when you go on visit and understand the financials of that borrower. And statutory audit, I understand that you people don't get that much time to interact with the borrowers and this, that. But still, if you get a chance, so please try to educate them so that our credit portfolio, particularly of our country, get into good shape all the time, right? Now, when I say that you should teach or guide the our clients, similarly, red flags may be noticed by CAs. Now, coming to my topic. Identifying red flags or early warning signals. If I say that this is the major challenge, task of our internal as well as external audit. Though this exercise should be done at the branch level also, where the credit is being maintained. But what happens during the, as you would have experienced while you are visiting the branches, branch people are not that much comfortable in view of the targets, in view of the working pressure, in view of the other reasons that they could not pay focus or give attention to the credit portfolio, health of the credit. Many things we will be discussing in the later part of this program also. Many of the things they miss. So when you are visiting, see this theoretically, you would be knowing better than me. With the perspective of a banker, being having some experience of banking industry, I will just use this platform. If moderator Amit sir permits me, I will like to use this platform to discuss with you. It will be one way, although, so that you can contribute your role in more effective way when you are visiting the branch, conducting the audit as internal auditor or external auditor. So now, red flags, what? We will be discussing a few red flags individually shared by the RBI also. Rapid growth or unusual profitability. This is a very critical point. When you go through the financials and analyze or compare the financial figures of 2-3 years, in any 1 year, particularly rapid growth towards profitability, towards sales, then it might also be possible that losses are increasing or profitability is reducing. So this is a red flag, starting with fixing the financials. Here, our role as a banker as well as your role is very, very significant and prominent, that we should pay attention how to check, how to educate our borrower, our customer, our client, that decreasing profitability or downward going the sales will impact the credit health also. Inability to generate cash flows from operations. Now, you must be, I think you are more knowledgeable than me. Bank clients as well as bankers all are having two types of profits: operating profit and net profit. So when cash flows are not generating from operations, means money is being flowing in from other sources, this is a red flag for that borrower. Very, very concerning issue for that borrower. Then highly complex transactions. See, these are the early warning signals, red flags also. Highly complex transactions. Highly complex transactions means making it, as you would have learned in the PMLA, layering of the transactions. It is just like the same thing. Complex transaction. Entering to one account, then to a second account, then to a third bank, then to the fourth bank, then cash transaction, then again depositing to your main account. So these sort of complex transactions make very, very complexity for the banker as well as for auditors to analyze or understand diversion of funds. This is a main reason. Because of that, diversion of funds is always difficult to analyze. Right? I think you will be in tune with me. Then, unusual increase in gross margin. See, if the business was generating 5 to 7% net profit or operating profit from the operations per unit or whatever is the quantum of that, and suddenly in some year, in 1 year, the gross margin increased to 20 to 25%. It is to be checked whether the cost of raw material is reduced, whether the cost of production has been reduced, or in the market demand is so that the selling price has been increased enormously. So this has to be analyzed by both banker as well as the auditor. Then unusual growth in sales in receivable. Means, as we discussed in the first slide, receivables are generally recovered or realized, say, within 50 days time. Now receivables are received in 30 days or 20 days or 10 days. What changes has happened? What change has happened in that in the trend of that business or activity? So if creditors are, period of credit is increasing and period of receivables is decreasing, this is also a red flag for all of us. Unusual decline in the purchase. Now turnover is increasing, but purchases are coming down. How it is possible? Whether with the same production capacity, consumables are reducing, raw material is reducing, and sales are increasing. That also is red flag. And capitalized expense. Why it is being done? capitalize expenses. If the business is not in profit, then certain expenses are capitalized apart from depreciation. Depreciation is also booked in the profit and loss. Certain expenses are booked in the capital head, means balance sheet. On the contrary, if current assets, cash flow means current assets and balance sheet, balance sheet size is having a different impact, then many times capital expenses are also booked in the profit and loss. So that current ratio or current assets this net working capital can be increased, or otherwise fixed assets are being booked into the current assets, other assets are booked into the current assets, other liabilities are current liabilities are booked in the other liabilities, so that the current ratio and permissible bank finance PBF is increased. Right, you are getting me? So this is also a concerning point for all of us. Then concealed liabilities and expenses, increasing assets and making up the balance sheet. Many of these ratios make the picture. So this is also to be seen that when you are analyzing one more significant point I will share with you here. Later on, I may forget because that is not part of the slide. You may be conducting audit as concurrent auditor or statutory auditor or specifically stock audit and others. Stock audit is specifically for one account or two. So that doesn't relate to that. But for concurrent audit and statutory audit, particularly for current audit, when you are visiting the branch, you are submitting the report monthly. So I have seen that many of the auditors, concurrent auditors, are checking the new sanctions only, not review, not enhancements, right? Or many of some of the auditors are not checking the new sanctions in the same month. They are checking in the next month. They say that because whatever sanctions are being made in this month will be reportable for the next month. No. And secondly, suppose a branch daily sanctioning 4-5 files, 2-3 files, and your strength is you are visiting the branch once in a week or twice in a week. So it will not be possible for you to check every file. So then you will be going for the test checking. So whatever your basis of test checking is, should be part of your report. If you are checking all the files, new sanctions, you should mark in the report that all new sanctions have been verified, checked, not renewed, not review, not enhancement. And if you are checking on test basis, so you should mention that every alternate file, 1 out of the 5 file, whatever files you are criteria you are deciding for, checking the files should be reported or included in your report. Why I am telling you? Suppose in one account fraud happened, and that account by chance you did not check with the impression of your decision of the test check, then it will be asked why you omitted or avoided this file, whether it was intentional. So whatever basis you are making for test checking, you should include in it. Okay, am I clear for that? Next, financial crime detection and prevention is critical. Prevention is when prevention is taking place. Prevention is before disbursement. Detection is after disbursement. Prevention is part of the appraisal, and detection is a part of the compliance and monitoring. So fraudsters are so smart and intelligent, then it's not easy to trace their source, where they have conducted where they have made the adjustments, right? So financial crime detection and prevention is very, very critical. I have seen the appraising officers who are well qualified, still they missed many of the significant points while appraising the new proposal. And we will be discussing one or two here. It is a fact. It is a fact that regulatory compliance of financial institutions is growing at a faster. Now, in last 7 or 8 years, we have witnessed that regulatory compliance has increased or improved. You must have also witnessed that lot many communications are made. I think at one point of time, daily or alternatively, we were receiving the communication from regulator. When this was the time of 2013, 14, 15, right? So it is not like that regulator is sitting silent now. They are, and the result is also showing that effort, that efforts. Institutions facing losses because of financial crimes are growing. This is more concerning. Fraudsters keep innovating and beating the system. Say, now technology is also being used for detection, identification, prevention, transaction monitoring. Technology is also used. But still, the major concern is that whatever modus operandi in one fraud has been observed or found, in the second fraud, modus operandi is found entirely different. So whatever checks you are putting, fraudsters are more smart and they change their approach. Institutions facing losses. Okay. Emerging technologies like artificial intelligence and machine learning have seen practical applications. This is I was discussing with you. This calls for a solution where technological advancements have to be leveraged to beat the fraudster and allow early identification, tracking of their modus operandi. Means in larger institutions, suppose SBI is there, ICICI is there, HDFC is there, Bank of Baroda, PNB, Canara Bank, like that, Bank of India. Essentially, I'm not taking name of anyone. These institutions are having innumerous number of accounts. Means if you see in one branch, I have seen the number of accounts are not remembering by even the credit office. Even the file, name of the file, they see the index and then tell, yes, this account will be there. This is the fact I'm telling you. So when this is the position, real position of the bank branches, following the trends or following the early warning signals and red flags is not that simple as we are talking about, right? Now, we will discuss one case. This is a live case. First, we will see the facts and then we will discuss. Messrs CISA was incorporated in July 12 with the objective of renting out construction. Messrs CISA was sanctioned a term loan of rupees 850 lakhs in October 2012 for purchase of 8 stationary pump and 7 self-climbing placer booms. Why I have taken this example here? This is really an eye-opener. When I read about this case, it took me more than 1 week to understand the case fully. Really, I'm telling you, more than 1 week it took me. Invoices submitted for purchase because the chain was so vast and so confusing. Bills were raised on someone, purchases were made by someone, company was in other name, supplier was in other city, and borrower was in other city, securities were also in other city. It was very, very complicated. Invoices submitted for purchase of machineries, in fact, were for previous purchases by sister concern Messrs Sena. who had availed credit facility from banks and other branch, same banks and other branch. Means whatever machines, the quantum of loan you just see, 850 lakh, covering only 15 equipments. So it will be costing around, you can say 50 lakh each minimum, or 60 lakh, I think, if my arithmetic is not that much perfect. So those machines which were financed by this branch of that bank were already financed by some other branch of that bank in the name of some other borrower. And interestingly, the most funny part is that that borrower was also sister concern of this borrower who has availed the loan for this case study I am referring here. For purchase of machineries valuing 850 lakh, fake invoices were raised by a non-existent firm, Messrs Marketing. You get it? Means the bills, invoices were raised by, this came to at very late stage. That firm was not existing at all. This was the most funniest part of it. In 2017, bank received a notice from Income Tax Department. This was the whistleblower, you can say, in this case. So from the very first disbursement, or you can say after 1 month or 2 months, there were red flags and early warning signals in that account. But no one that much pain. And for 5 years, this account was allowed to run by anyhow. Overdues were there. Account was reviewed with overdues. Securities were shared, and everything was there. When this notice came, this notice was also not taken seriously by the bank. Messrs Marketing was not traceable, and VAT number printed on the machine purchase bills from Messrs Marketing was cancelled long back by the state sales tax authority. The machinery was actually manufactured by Messrs P Limited. Invoices were raised by Messrs Marketing, but machineries were manufactured by Messrs P. Messrs P Limited sold those machines to Messrs Sela, a group company. Some serial numbers were fake and not manufactured by Messrs P Limited. Whatever numbers were, some serial numbers were there, engine number, chassis number, or like that, because these are the equipment. Those numbers were also fake. In one case, the machine was manufactured after 2 years from the date of the account was continuously remained in SMA2 and slipped to NPA in the quarter ending June. Now, if this is the case and you are the auditor, how you will move? How you will? Right. If we go ahead, if we go to analyze or say do post-mortem at this stage, it will be found the major lapses were at appraisal stage. As I said, selection of borrower, identification of borrower is the key critical part of any credit. And I say selection of borrower, identification of borrower is not depending on any of the financial. It is your own decision. During your first or second or third meeting with the borrower, many factors work in that: body language of the borrower, communication skills, status, and everything like that. Financials are playing a role only in deciding the quantum of the loan, not selection of the borrower. You may be with me. So, due diligence of borrower, financials, security is missing most of them. We have witnessed that. Timely detection of fraud is also compromised, and red flags were ignored at every stage. A few of the red flags post disbursement observed are what we could collected from that report. This report was available on the net. Well, this was PMLA case also was there. Assets financed by the bank were not verified just after disbursement. When you are financing a long running process of this project, which is establishing in 1 year or 2 years, installed in 1 year or 2 year or 3 years, and you are making disbursement in not in one lot, maybe in 10 lot, 10 installments or 20 installments. Rule says that after every disbursement, we should ensure the end use, then only the next installment should be released. Here, subsequent disbursements were allowed without ensuring assets creation of previous business. Another aspect is that purchase invoices were not studied. When we say studied, means if those were received, simply fine. No one tried to go through. Modification in terms of sanction were allowed without ascertaining the quantum of loan was increased, period of disbursement was increased, genuineness reasons behind delayed repayment was not discovered, because from very second month repayment was made. Not documented. See, whenever you are discussing with any of the borrower, any interaction or any meeting, generally it is advisable to document that nothing was done. Borrower was routing operations through other. Means borrower was having accounts with 3-4 other banks. Amount was diverted, routing through other banks. The notice received from income tax office was not cared, and seriousness of the submissions in the notice were not taken. And this was the most alarming red flag ignored. So when you are coming across any of such case, please spend 10 extra minutes, read that thoroughly, make your points, then refer the case to the competent authority, whosoever is assigning the job to you. For you, competent authorities, who is assigning the job to you, right? Flash report is there, or your letters are being issued, are allowed to be issued by you people. So please use that very carefully, but use this. Red flags are very, very important for auditors particularly. What RBI circulated EWS for EDFF by financial institutions may be categorized as early warning signal and early detection of financial frauds. We can categorize. See, RBI's 45 early warning signals issued in the first lot could be categorized. We categorize them in the 6 or 7 categories. Is the financial, behavioral, industrial, geographical, perceptional, like that. So when we classify those according to their category, the understanding of those red flags or early warning signals was much easier for us also to understand. So one was the financial EWS. These financial EWS are very, very crucial and significant. They directly lead to the conclusion that something wrong is going on. Okay. Many times what happened, when we see some red flag, we think that this is of financial nature, but that is not of financial nature. It may be of behavioral or perceptional. These 2-3 are very confusing. We have to be very careful while deciding on that which sort of this EWS is there. If these EWS are, because financials are being the second stage of credit decision. As I said, first decision is when you decide that we are going to enter into the shoes of this borrower, this applicant borrower. We are going to finance this borrower, right? Then second stage is the deciding the amount of the loan. That is basically depend upon the financials as well as on the security. In many of the banks, security is not of that consideration, but in many of the banks, security is major consideration for deciding the quantum of loan. If these are studied at nascent stage, means initially if you are studying this, particularly discussing with the borrower, because financials are part of that project or of that borrower. No one else can explain you better than the borrower, right? So whenever you are finding something confusing or fishy or like that, it is better to discuss with the borrower that this is my observation. You please clarify it. What is the? If it is resolved then and there, and getting timely solution is possible. Otherwise, once it is allowed to go through, then it cannot be attended at any stage of that credit. Right? And after discussing that with that borrower, it may be possible that our bank may come out from that credit. It may be possible. And we may not be in a position to suffer a major loss. So what I mean to say that if we are open, means lenders, if lenders are open and dynamic and vigorous, then only EWS will give best. Yes. One more point is here. In credit administration, time is very, very crucial, as I said earlier. Even slight delay may give an opportunity to the borrower to remove the securities from the spot, and recovery of by enforcing even under surface C will not be there. Suppose I have faced one case in my branch. We sanctioned a big project, and I joined that branch just 4 or 5 days back on. Because that was the big account, I visited that. After my visit, 3-4 days after my visit, the CA of that firm telephoned me, sir, borrower is not available. Overnight, one night, the gentleman shifted the entire family overnight with maximum luggage, whatever items he had. He could. So for me, that was just a surprise because I was not aware of the branch also. 3-4 days back only I joined. When I reported that case to my seniors, they also could not believe how it happened. 5-6 days back, he visited that office also. I went to the file when he started that all processes, surfacing and this. We could recover some amount. Valuation of the property securities were not that much. Anyhow, what I'm telling you, if we could not have taken that decision at the right time, I think that will be a biggest mistake for us in terms of that. Right. So behavioral early warning signals. I can take an example here. Borrower is avoiding to meet or to talk. You are trying, you are telephoning, you are deputing your officer, you are also visiting his her place, but he or she is avoiding. This is a very, very, I think this is the first after returning of the checks and overdrawings in the bouncing of the checks. This is the second serious most red flag when borrower avoids to meet with the bank. It should be taken up very, very seriously. Borrower is not cooperating with you in removing the small, minor irregularity. Suppose the stock statement is unsigned, received unsigned. The stock statement is not received for last 2 months. Certain other statements are not received. He or she is not signing the document. You are repeatedly asking because audit observations are there. You have to comply with the report and this, that. And he or she is not cooperating. These are also sign of the red flag, early warning signals. Why he or she is not cooperating with you? When the loan was disbursed, he or she was sitting all the time in the branch. But now he's avoiding you, right? Despite your repeated request, he or she is not allowing you to physically verify the securities. If you have financed the car, he or she is not allowing to verify the car, visit the car. Every time he or she is making excuses. It has gone to there, it has gone to there, it has. Okay, you just tell me where it has gone. I will ask that branch of that city manager to verify. It's possible. People are doing. But this is also right. Even routine informations, small information, the states are not shared with you. In one of the case, fire took place. In another case, theft was there overnight. Bank was not informed. Insurance copy was with us. He didn't lodge the claim also for insurance. This is also sign of red flags. It means either securities were not there or false or fabricated insurance was offered. Are you with me? You will be agreeing with me. And other EWS, we can say that I said initially that industrial, geographical, and up to some extent perceptional EWS are also there. Apart from these 2, 3, 5 EWS categories, there are 2 major categories are there, which are very, very significant, and we have discussed them before this also. One is the preventive, means at the time of appraisal of the credit, we get so many red flags. If we are countering those red flags, our credit will be good. Means it will help us in taking the decision, either yes or no. And if we are ignoring them, okay, it will be done later on. Borrower is assuring that, sir, I will do it. And you are coming into his or her this assurances, then definitely it will be creating problem. Okay. And second is the detective. Detective we are already discussing. And preventive, as I said, these are basically in the identification of the borrower, financial analysis, securities, is registration of the securities, and like that. These are compromised at that stage, it will be a serious threat in the days to come. Default in payment to the banks and the debtors and other statutory bodies, etc., bouncing of the high value. In one account, the credit was around 300 lakhs. It was taken over from some other bank. They had 3, 4 accounts, associate accounts. In one account, it was 300 lakhs. In one account, it was 75 or 100 lakhs. In one account, it was 40 or 50 lakhs. Initially, what they were doing, they were transferring the funds from the one account to the other. Suppose in the account, a check is received in clearing in A account and funds are available in C account, they were transferred. Initially, it was not taken seriously. But what happened after 15, 20 days, there was no balance in all the 3, 4 accounts. Checks started bouncing. Not pass overdrive indefinitely because there are rules and regulations. So in once in a 15 days or once in a month or like that, you can allow that deal that. Slowly and slowly, those accounts started creating. So check bouncing, particularly high value checks of reputed companies. Suppose you are dealing with Tata Motors. The check is issued for the Tata Motors of 1 crore or 50 lakh. Or you are dealing with Maruti and check is issued for Maruti 1 crore or 50 lakh. and those checks are bouncing. These may affect your agency arrangement also. Second, very important aspect which we have discussed initially also, funds coming from other banks to liquidate the outstanding loan. When you get after this online banking, net banking, once the check is received in clearing, we contacted that borrower and he or she is making arrangement online payment transferred in the account. And before just returning of the checks, there is a time schedule. Before 5 minutes or 10 minutes before, call will receive, sir, amount is transferred, please pass it. And this was the regular phenomenon. These all are the red flags. Reduction in the stake of the promoted error. This we are listening day in and day out, particularly in the share market. Financial advisor, CFO has resigned, ED has withdrawn their stake, and like that. This is happening in most of the companies. So if this is the information, it should not be information. It should be taken as seriously as another red. Increase in borrowings despite huge cash and cash equivalents in the borrower's balance. Might be in the case of Satyam. And Satyam is a different, altogether not similar case. But many times we see that in the balance sheet, credits are availed for 50, 60 or 100 lakhs. Cash is lying in the books every time 30, 40 lakhs. Which businessman will like to pay interest to bank if idle money is lying in the borrower? You may agree with me. This is a very crucial point here. Not routing sale proceeds through bank means account is sanctioned by my branch, disbursed by my branch, securities are charged to my branch, and account operations in the account are being conducted through the money. If this is with a purpose, with due permission, then it is okay. But if it is not with the permission, without any genuine reason, then it is a serious. Right? Behavioral red flags, again, as we discussed, these are basically depend upon the behavior of that person. Means it may be related with the financials of that firm or that person, but largely it is because of a behavior of that person. See, invoices devoid of 10 and other. The invoices are of two types. One is the sales made by that borrower, and one is the purchases made by the borrower. Sometimes in purchase invoice 10 is not. Okay, it may be accepted, small amount purchases are there. But when you are enjoying handsome limits and your invoices are not having the 10, it means something. So it may not be all invoices. But out of 100 invoices, 10, 15, 20 may be the without. This also a red flag. Now, this is the most serious behavioral EWS. Request received from the borrower to postpone the inspection of the ground for films, or visit the vehicle or visit the security on filmy grounds. This is a very, very serious threat, and means you should decide that something wrong is going to happen. Because if he or she is not able to go, he or she may allow you to go because staff is everywhere. There is staff works there. Right? Resignation of the key personnel and frequent changes in them. This we have talked with you in advance. And substituting the officials of the company is okay. But the key promoters or key portfolio holders, suppose there's a CFO is there, ED is there, or your means technical consultants are there, which are working with you for 20, 30, 40 years, and they are switching or they are resigning, something serious. It should be taken serious. And as we discussed in the audit report, poor disclosure. I think this point is not covered so far. Poor disclosure of materially adverse information and no qualification by the state. And I think you must have witnessed this in many big fraud cases, not only in India, globally, that statutory this audit report is not carrying any comment related to adverse information or qualification. And this is a serious threat. Even the Company Act doesn't support it. Steep decline in power bills in a manufacturing plant. This is also a serious concern. Why this is a serious concern? Suppose your unit is running in 3 shifts of 8 hours each. And initially you were running 2 shifts. Your power consumption was, you may say 100 megawatt or whatever it is. I'm just taking. For 2 shifts, 1 month. Now suddenly it has dropped to 60 megawatt or 50 megawatt. On record, you are showing 2 shifts are running. You are showing the production is there. You are showing sales are there. You are showing purchases are there. You are showing the workforce is also there. But power bills are reduced. How come it is this? Either you might have some alternate arrangements. Solar installation may be there. Generators may be there. There should be a genuine reason for this purpose. So my submission is that whenever you find any such things missing or reports, please do it carefully. Go ahead carefully. Some other red flags are there other than specified by RBI. This is on the basis of my collection and my interest. Number 1, this is generally ignored by the bankers. A good number of return items from the deposits or return checks drawn on the customer's account. See, we are taking care of, we are talking about the checks issued by the our party, our borrower. But what is about the checks deposited by him or her into his or her account? And those checks are bouncing. What does it mean? We are not taking into that account. Is this not a serious concern? This is a serious concern. It means the supplies this gentleman or lady is making to the people, they are not of worthy. Means their financial position at stake, or there may be some dispute between the supplier and the purchaser. There may be a quality concern. There may be a quantity concern. There may be some bogus bill entry. This is to be checked very carefully. If checks deposited by our customer are bounced repeatedly, and then we have to scrutinize whether only any one part is there whose checks are being bounced, or more are there. So we have to study and discuss with the borrower why this is happening. Delayed or missed employee payrolls, very, very significant. As per the norms, every employer is supposed to make the payment within 7 days or 10 days of completion of the month. Nowadays, majority of the employers are paying the wages bill on the last day, at the most last day, or first day of the next month, or following month, or the second day. If delayed or missed employee, it's very simple to check. Because when they are maintaining the account, their staff is also maintaining the account with us because they get the same day credit. And when their staff is coming to your branch asking for payment and their account is showing no balance, and your borrower's account is also not showing any balance. And if you go through in detail, you will find that for last 6 months or 4 months or 1 year, wages bills are coming very late. And sometimes it is for 2 months together or 3 months together. Serious threat. Ratio of raw material, stock in process, finished goods, receivables, creditors, and sales trend change compared to the usual trend. Suppose you are your customer is dealing in the marble store, right? Just hypothetically, I'm taking this example. And the size of the normal granite stone is 8.4 or 8.3 or 7.4 or 7.3 like. If you are making something of that stone, you will try to use the maximum of that stone. Means if this is of 7 feet, you will try to make the 2 parts in 3.5. If you are going to make 4 pieces, then you will try to make 1.75 each. If this is of 8, then you will go for the 4. Means one stone will give you 4 items produced by you. Or sometime the purchases are same, but production is coming down. Means initially the unit was producing or making 100 units per day. Now it is making 60 to 70 units. Whereas the purchases are same, manpower is same, power consumption is same, everything is same. Stock holding is also same. What is happening there? So we have to compare with industry as well as with their past record. Raw material, stock in process, finished goods, receivables, creditors, and sales. That should be matching with each other. There should be synergy between all these figures. Right? So this is also a red flag, threat for our credit. Then any attempt as deception, misrepresentation of that, as we discussed in the audit report, note accounts, certain informations which are mandatory, not given. Annexures of certain means debtors, creditors, stock, fixed assets, not given. And other some important information are not shared with the banker. Or misrepresentation. These both are very very serious red flag, though it is of the behavioral nature. Creating fake or shell entities for the purpose of misappropriating goods and services, diversifying. Means, what is that? Just to making the money genuine, different companies are made, layering, as we discussed. Cash is deposited in one form, check is issued for second form, then again check is issued for second form, then check is issued for the second form, and then finally it comes to you. Or cash is deposited in your account, then it passed through 3-4 accounts in your branch or other branch of the same group, and then finally amount transfer to parent. So this is also a threat. PMLA case is also there, and ED enforcement case will also be there. So we should not make ourselves parties of that. We are coming to notice. If this is coming to our notice, we should immediately inform competent authority or the person who is dealing with it. Right? Then steep decline in power bills. This we have discussed. Negative price perception in the eyes of end customers, quality of service, goods deteriorating. This is a common problem. After sales service is not available. Warranty is not entertained. Replacement is not entertained. Returning of the goods is also not entertained. So what does it mean? Means there is something wrong. The company and it needs immediate redressal. Sustained year-on-year decline in economic growth of the region. Now, this is a geographical early warning signal, which is not related to largely, it is not related to the party. But if this happens, this eventuality happens in your area, so it is better to talk with the borrower, discuss with them. If it is possible, they may change the line of activity. If it is possible, they may come out of that activity. Otherwise, money of your branch or bank will be in difficulty. Right? Let me discuss one more case. More cases are there. Bank sanctioned a cash credit. Okay, simply it may be of 2 lakh or 2 crore. The account turned to NPA within 2 years from the date of sanction due to poor turnover and non-payment of interest. Right? Very simple. It was found that on the same day of disbursement, the borrower transferred 70% of the sanction limit to current account of the firm maintained in the same branch. Now see the point. You disburse the limit, he or she and from that account, money withdrawn through ATM and by cash payments through bearer. The most funny part is that no stocks were found at the beginning. What are the red flags here? What are the red flags here? Means this is a lapse of monitoring, not compliance, not sanction, not disbursement. This is a lapse of monitoring. When you are sanctioning a big amount loan, the end use of the funds has to be. What happens in one case? The borrower was sanctioned around 200 lakhs term loan. As per the terms of sanction, disbursements was to be made to the supplier of the machinery. But because the borrower was very influential and very close, he was asking the branch to transfer to his current account the disbursement, and from that he will pay online. He was giving writing this much. The branch was simply transferring the funds to the current account, maybe of 30 lakh or 20 lakh. In the disbursement was in phases. When it came to account was turning into sick, it was checked. The person was having account in 4 or 5 branches of the same bank and the other bank. And in the night, he was transferring the amount into those accounts. Suppose 40 lakh you disburse today. First of all, one more thing is very significant here. The disbursement will not be made in the round figures until unless it is of the that much requirement. Means suppose some item is purchased of 10 lakh, then disbursement will be of 10 lakh. If this is of 9,90,462, the disbursement will be for that amount, not for the 10 lakh in the round figure. Right? But those disbursements were made in the round figure. Overnight, he was transferring the funds and the funds were utilized for this, where the funds were diverted. And when after 3-4 months, account was sick, it came to knowledge that this end use of the funds was not right. So this is also a critical situation. No stocks were found. 70% of the amount is used by the through current account and non-payment of interest and poor turnover. All were the red flags. Let me see, discuss one more case here. The borrower company submitted fabricated book debts statement and creditors detail. Now what you will do? If borrower is submitting fabricated book debt statement and creditors, how you will do? When we are discussing about the enhanced due diligence, you should also guide your clients. The enhanced due diligence should not be done only of the borrower or his or her securities or his or her financials, but also of the suppliers, creditors, and debtors. Because when the sale is made on credit, it is your money which has been went into the other person's account, right? Am I right? So when you are financing the debtors, if you are financing the debtor or you are not financing that, the things will remain same. Okay. Then creditors, because quality of that production or that company's business will be depending upon the supply of the creditors. If creditors are not genuine, it means bogus entries are being routed. Okay, I think Somashekar sir has come. Kaveri ma'am, may I take 5? I think still 8 minutes are there. Hello, Kaveri.
Yes, sir. Yes,
may I continue up to 7:30?
Yeah.
Yeah, then you will need some time for questions also. I will try to finish it fast now.
Sure, sir.
Borrower manipulated. Sorry, Somashekar sir, I am taking.
No issues. Continue.
I will try to finish it as earliest.
Okay.
Borrower manipulated its financial. This we have discussed in detail. Various unrelated companies were shown as debtors and creditors, and letters returned undelivered since those counterparties were not present. But this happens in the cases when we issue the notices, letters to the creditors and debtors. Those notices return back that these people are not available. This address is not. Difference in sale and purchase figures in the annual financial statement and stock audited. Very significant. See, stock audit report is also made on the basis of the accounts made by the borrower, and financial statements are also made on the basis of the accounts maintained by the borrower. Why there is a difference? Something suspicious is there, right or not? So we should be very careful when we are getting any statement from the borrower. We should compare it with the previous one, right? Overvalued the export sales because incentive is there, government subsidies are there, so overvalued. And secondly, this is a case of money laundering, right? Export as well as import in both the cases. So PMLA and money laundering. So if export sales are enhanced, it should also be taken care as a red flag. Didn't disclose the names of the related parties and transactions with related. We put a condition in the sanction. The major supplier and major buyers of that businessman or that borrower should be in our file. And whenever he or she is making the RTGS or NEFT or issuing checks or making the drafts, it should be checked maybe on random basis, but it should be checked whether the payments are being made to those parts or some other part. If any change has happened, because suppose it may be possible today he was making the purchases from A, now because of the market competition and this that he is going to purchase the item. So he or she should inform to the bank that we are going to change this. Okay. So Kaveri ma'am, from my side, it's going to be over now. Finally, I will say thanks, and in between, if you put the questions, banks need to be agile to respond to threats and approaches and technologies. Predict, prevent, and detect financials. Now, one additional term I have used here: predict, prevent, and detect financials. By inculcating habit of reading fine prints, particularly for our auditors, it is very significant, very important. Read between the lines. When you are analyzing the financials, when you are analyzing any account operations, transactions, and this, that, please read between the lines. It is very, very simple. If you can look for and identify set of laws in preventing frauds, maybe please share, please do share. Thank you. Thank you very much. Now, Kaveri ma'am, if any question is there, you please. Yes, please. Please unmute yourself.
Hello. Yeah.
Yeah.
Fortunately, sir, the query box is just filled up with the appreciation and gratefulness for you.
That's that.
What
That's
a
not
wonderful, what a wonderful and knowledgeable session, sir.
That may be, but I'm more interested in the questions and queries, not in the appreciation.
Actually, sir, your concepts and the case studies, the detailed case studies actually made the concepts really clear. We don't have any questions as such.
Okay.
No, sir, we don't have any questions.
Okay. So should I say thank you now? Because now it's still 4 minutes are there. I kept 10 minutes for the question answer. Even then. So Somashekar sir, I'm handing over to you.
Good evening.
Good evening, sir. Good evening. Very good evening.
Yeah.
So Kaveri ma'am,
I'll just introduce the next speaker for
please.
today then. Yeah, rightly said, every beginning has an end and every end is a new beginning. On that note, I am honored to have the privilege to welcome our next speaker for today's session. A professional banker with 39 years of experience, Mr. V. Somashekar has worked at a leading PSU as well as at a leading private sector bank in the areas of international trade finance, regulatory governance, risk management, and compliance. His core competencies include documentary credits, international treasury management, credit management, and coordination with regulatory authorities in matters relating to foreign exchange and trade finance, amongst others. He has conducted various training programs for NIBM, Institute of Chartered Accountants of India, and several banks on various matters. He is also a corporate trainer in organizing in-house training programs for the corporates on risk management, trade finance, inbound and outbound investments for the large corporates across the country. Along with the professional highlights, as mentioned above, Mr. Somashekar is also a certified documentary credit specialist from the London Institute of Banking and Finance, a postgraduate in international finance from Karnataka University, and a certified associate of the Indian Institute of Bankers. Sir, we are really honored and elated to have you with us for today's session. The virtual dais is all yours for taking the session forward.
Good evening.
Thank you, Kaveri. May I leave now?
Yeah. Thank you so much, sir. On behalf of the Digital Accounting and Assurance Board and all the participants, I express my sincere thanks to you, sir, for sparing your valuable time and imparting this ocean of knowledge to all the members. Thank you so much, sir.
My pleasure, ma'am. Pleasure. Thank you very much. Somashekar sir, have a good session.
Okay.
Thank you. Thank you. All the best.
Good evening. And at the outset, I thank the Institute of Chartered Accountants for providing an opportunity to share some of the experiences on the ever-growing importance of the subject, cyber security. So let me first share the screen to start the session. Just a second. Is the screen visible and am I audible to the participants? Okay. Okay, good evening. Welcome to the program on cyber frauds in banking sector. Before we start the actual concept, let us set the context Let us set the context with the agenda. We'll talk about typologies under cyber frauds. We are also, very important, look into the draft guidelines on prevention of cyber frauds, which was released by RBI in the first week of June. And we also look into what are the key takeaways of the program. So let us first look into the context setting for the program. So the context setting is a small case study where I will narrate you the chronology of the events, basis which I'll be explaining the significance of this particular case study. On 18th December, client received an email communication. Client means a client in India. The client in India received an email communication from the overseas vendor containing copy of the invoice. Client received email communication from the overseas vendor containing copy of the invoice for the amount US GBP 3000, which was due for payment on 24th December. So on 18th December, say your client, you are the child accountant for this client. Your client received an email communication from the overseas vendor containing copy of the invoice for the amount of sterling pounds 3000, which was due for payment on 24th December. Now the client was aware that this is the payment that he has to make to the overseas vendor, and hence he just filed the email communication because he has already diarized in his register that he has to send an outward remittance for 24th December value for GBP 3000 to the overseas vendor for having procured the goods from the overseas vendor. So that is the first point. Now the second point. On 23rd December, subsequently a second email communication comes along with the original email trail of 18th December, and your client receives along with the new invoice for the same amount. This mentions the change in the bank name. 18th December, your client has received a email communication from the overseas vendor that on 24th December, there is a payment to be made by your client to the overseas vendor for having procured the goods. And the amount of this particular invoice is 3000 sterling pounds. Now, on 23rd December, your client again receives a second email communication along with the original email trail, which was sent on 18th December. But here, it contains a new invoice for the same amount. Amount is same, 3000 sterling pounds. It contains a new invoice for the same amount, mentioning the fact that the vendor has changed the bank details. The vendor says, I have changed my bank, and this is the details of the new bank. I changed the account from the existing bank to the new bank, and this is the details of the new bank for which you have to make the payment. Good enough. 18th December, your client received a communication, and again on 23rd December, he received a subsequent communication. But here, the invoice is same, amount is same, along with the original email trail. The vendor says, I have changed my bank, and these are the new details for which you have to make the remittance. Now, on 24th December, the client goes to the bank, submits the necessary documentary evidences to the bank, and the bank makes the payment of GBP 3000. Next, what happens? On 28th December, second invoice, along with a request is given by the client. The client gives a second invoice along with a request for sterling pound $1,03,000 for the same vendor with the same bank details, revised bank details. And this is a second transaction. And now the bank also makes payment because this was the payment for $3,000 which they made earlier. And this is a subsequent payment for a second invoice, and the bank has made the payment on 24th December. Now on 5th January, that is after 10 working days, the vendor calls up the client. That is, the vendor, overseas vendor, calls up your client, and they say that they have not received the payment of 3,000 sterling pounds, which was due on 24th December. And they also say to the client, because when the overseas vendor calls up the client and tells that I have not received the payment for 3,000 sterling pounds, value 24th December, your client informs to overseas vendor that we have already sent the payment on 24th December. We also have sent on 28th December sterling pound 1,03,000, which was demanded by you. Now the vendor says they have not raised any invoice for GBP 1,03,000. So where exactly is the problem here? So we are setting the context in appreciating cyber frauds. Okay, so here 18th December, your client received an email communication, reminder from the vendor that there's a payment due for 3,000 sterling pounds on 24th December. Now the client knows that he has to make the payment and he files this communication. On 23rd December, the client gets a subsequent mail. But here, the same invoice for 3,000 sterling pounds, but the vendor says, I have changed my bank details. So you have to make remittance of 3,000 sterling pounds to the new bank account, which I have opened recently. And on 24th December, the client sincerely carries out the request given by the overseas vendor and remits payment of 3,000 sterling. On 28th December, the overseas vendor sends a revised second invoice for 1,03,000 sterling pounds, asking for payment for a second tranche of goods that he is going to send. And the client has made the payment on 28th December. Now on 5th January, the vendor calls up the client and says, I have not received the payment of 3,000 sterling pounds, which was due on 24th December, and I have not raised any invoice for GBP 1,03,000. So let us go into the chronology of the events as per the facts. Now, on 18th December, the email communication came from John Dio @123abccompany.com. This is the original vendor. On 18th December, the email communication came from John Dio @123abccompany.com. Now the second email, the reminder, came on 23rd December. And this email communication came from John Dio @123abccompany.com, sterling pounds 3,000. So you notice a difference. The first original mail, the original mail from the original vendor came from John Dio @123abccompany.com, whereas the second mail has come from John Dio @123abccompany.com for sterling pound 3,000. And on 28th December, the mail for 1,03,000 GBP. On 28th December, the mail for the second invoice again came from John Dio @123abccompany.com, sterling pound 103,000. So what the fraudster has done here? Now the fraudster, first he has put in comfort to the client in India. He has sent an email from the fabricated email ID, John Dio @123abccompany.com for just 3,000 sterling pounds, giving comfort to the client that the email ID is from the original vendor. Once on 24th December, the client has remitted 3,000 sterling pounds. Now the overseas fraudster has infused confidence into the client in India. And on 28th December, he sends a second invoice telling that send me 1,03,000 sterling pounds. I will send you the goods for 1,03,000 sterling pounds. That means he has put in confidence into the client in India, basis which now the client presumes that this particular 1,03,000 sterling pounds also is going to the same original vendor, and he has made the remittance. So what is the context here? The context here is hacking of the system. So on 18th December, when the email communication was received from John Dio @123abccompany.com, there were chances that the hackster would have hacked this mail. And on 23rd December, he takes that original mail forwards the original mail along with an alternate invoice for the same sterling pound 3,000 just to infuse confidence into the client, but he changes the bank details. The original account of the customer, the bank account of the original vendor, say for example, it was with ABC Bank. Now the fraudster has changed it to XYZ Bank. And once the client has remitted the 3,000 sterling pounds on 24 December, the fraudster took advantage of the confidence that the client has on the fraudster, and he sends a second invoice for 1,03,000 sterling pounds, which is respectfully transmitted by the customer in India, by the client in India. And this is a cyber fraud. Now, what is the concept here? So what do we understand by this particular case study? Now let us go into the details. Now, what are the lessons? What are the lessons to be learned in this case? Point number one, COVID pandemic has increased the risk of invoice frauds because of online transactions, and the accounts payable staff at companies are working in isolation. So all of us know between 2020 to 2022, and even today, many of the companies across the globe, they are working from home. And this has increased, the COVID-19 pandemic has increased the risk of invoice frauds because all the accounts payable staffs in various companies across the globe are working in isolation. And this equally applies in the Indian context also. Many of the companies, they are now under hybrid model. Not always the staff are coming to the offices. Maybe 2 days they come to office, the balance 4 days they are working at home. So this has induced the fraudsters to take advantage. Now, 81% of the firms were targets in the area of invoice frauds, either through duplicate invoices or multiple invoices. In the case study we have just now looked into, this is a multiple invoice fraud. 81% of the firms were targets in the area of invoice frauds, either through duplicate invoices or multiple invoices. So what was the objective? To extract monies from the companies with vulnerabilities in their accounts payable processes. So what does this mean? Many of the corporates, many of the companies, many of the firms across the globe, including India, they are still manually driving their accounts payable processes. Because of which, the fraudsters take advantage of extracting monies from the companies through either duplicate invoices or through multiple invoices. Now, there is a report of Europol. Europol is the European Union's law enforcement agency on crime frauds during COVID period. So this particular agency, the law enforcement agency in Europe, the Europol, have come out on record that 81% of the firms are targets for invoice frauds because they don't have sophisticated accounts payable processes. And when we talk about firms do not have sophisticated accounts payable processes, we will include India also. Many of the firms in India, they are still driving their accounts payable departments through manual processes. Now, what is the lesson here? So as a company, as a firm, or as an organization, we need to put in place adequate controls through technology to ensure that we will not become scapegoats to the fraudsters. Now come to the second point, red flags. Companies with different addresses, companies with different locations. So here in this case study, we saw the email ID, johndio@abccompany.com was the original mail ID. The fraudsters hacked the systems and he has sent a mail ID with johndio@abccompany.com. Okay, that was in a different location. So that was a red flag. Had the client noticed when he received the second mail that this came from abccompany.com, he could have as well avoided this particular fraud. But unfortunately, the company was not able to notice. So companies with different locations, companies with different addresses. See, initially the fraudsters, they start generally with low amounts. So in this case study, he first started with 3,000 sterling pounds only, changing the details of the bank. He told the client in India that I have closed my account. My original account, that is my account with the first bank, is closed because of some issues. I have opened another account with a different bank. So please send the same 3,000 sterling pounds to my different account. So they gave or they infused confidence into the client in India. So generally fraudsters, they start with low amounts and then they will go for high amount. So once they infuse confidence, once the Indian client got the confidence into the overseas fraudster, they sent for a higher amount. Because approval for processing becomes easier as the amounts are low. So what happened in the first event? When he sent the revised invoice telling that my bank details are now changed and these are the new details. Now, the higher authorities in the company at the firm level, when the accounts assistant puts up to the higher authorities, they'll give the approvals because this is a small amount. Approval for processing becomes easier as the amounts are low. And once the approval is given, and once the remittance is made for this particular 3,000 sterling pounds, he started instigating the company with a higher amount. So here, Pricewaterhouse has conducted a study. Pricewaterhouse, they conducted a global economic crime and fraud survey in 2020. And they have taken on record, they have put on record that companies with different locations, companies with different email addresses, they start fraudulent transactions with the genuine customers. Generally, they start with low amounts and then they go for higher amounts. Because approvals for processing lower amounts is easier than approvals for higher amounts. So this is a report by PwC, Pricewaterhouse, in their Global Economic Crime and Fraud Survey in 2020. They have taken on record this particular model used by fraudsters. Now the third one, 39% of the invoice frauds were through external perpetrators. Many of the cyber frauds, which happens across the globe, 39% of the invoice fraud. So again, Europol, which is the EU's law enforcement agency on cyber crimes during COVID period, they have taken on record through their research that 39% of the invoice frauds were through external perpetrators, that is outsiders. And 37% of the invoice frauds were through internal perpetrators. So even people inside the companies, they have collided with either the external perpetrators or the other fraudsters, and they have done these frauds, facilitated these frauds. So this is a report of Europol, which is the law enforcement agency in the European Union. So this is the lessons to be learned. So what does this gives us an indication? Any firm, many of us, we are running firms. Many of us, we are in charge of payment systems in the companies. Many of us, we are auditing the transactions of various companies where we are interested with the job of doing concurrent audits. So here, the concept here is manual processes. Wherever the firm is working on manual systems, wherever the firm is working on manual processes, they need to implement the updated technology. Of course, this will result in a higher cost to the company, but this is a one-time cost. So put in place robust technology so that this can be minimized. At least to the extent possible, this can be reduced. So that is what we would like to share through this particular case. Now, what are the possible solutions to this? Whether master data on all the counterparties are created in the system. I'll just give you a small example. So in this case, in this particular case, whether the client had master data on all the counterparties he is dealing with. He may be a small customer. He may have 5 vendors in his database. So whether he has created master data on all these counterparties who are his vendors or who are his buyers. So what is meant by master data? Whether he has the data on the details of the counterparties, including their names, addresses, telephone numbers, fax numbers, email IDs, whether they have the details of the bank accounts maintained by the counterparties. So master data is that. Whether as a client, your client has put in place the entire master data relating to the counterparts. Master data is name and address of the counterpart, email ID of the counterpart, telephone numbers of the counterpart, fax of the counterpart. Along with that, the bank details. The counterpart may have 2 different bank accounts. So whether all these details are created in the system, that might help in preventing frauds like this. Now, point number 2, registered email IDs. So whenever a client receives a email from the counterpart, whether within India or overseas, the email ID should be registered in the systems of the company. This is one of the very important points which RBI also has recommended in their guidelines. So wherever an email is received by the company from the counterpart, the company should have registered email ID of such companies, so that this will help the companies to minimize the frauds like. So the company should have recorded the registered email IDs of all the counterparties with whom they are dealing with. So here, now when the initial mail came from johndio@abccompany.com, that was a valid ID of the overseas vendor. So whether the company had recorded this in their systems as the registered email ID, it was not done. Had the company recorded in their system that this was the registered email ID of the overseas vendor, johndio@abccompany.com, and if they had put in controls that any mail coming from other than johndio@abccompany.com, the system would have thrown out the mail. But here, since the client had not kept on record, since the client had not been supported by the technology available, this fraud got initiated. So that means possible prevention is let the company create a master data on all the counterparties with whom they are dealing with, and also create the registered email IDs of the counterparts, both domestic and overseas, so that the system can support. Technology will definitely support the company wherever they have loaded the registered email IDs. So any mail coming from other than the registered email ID of the counterparts, whether domestic or overseas, the system will throw out telling that this email ID is not registered, so that the client can deep dive into this particular email that has come and can verify whether this really came from the original vendor or it came from a fraudster. Now, third, invoice details. So here, I will just like to give a small example, taking the same case. Now, the first point, on 18 December, he received an email communication from the original vendor. The original vendor says, you have to pay me 3,000 sterling pounds on 24th December, and he is attaching the copy of the invoice. And the client knows that he has already received this invoice. He has already received the goods also. So presume the invoice is 12345. The invoice number is 12345. Now, if the client has support through technology, under the ERP system, the client can control duplicate invoices. The client can control multiple invoices. So, as soon as the customer has received the invoice, the original invoice from the original vendor for 3,000 sterling pounds, 12345, and that is supported under ERP. Subsequently, when the fraudster sent a duplicate invoice telling that my bank account details have changed, the system would have thrown up. The system would have thrown out the transaction, telling that the original invoice contained bank details of ABC, whereas the duplicate invoice is containing the bank details of XYZ. So that is the point I'm trying to emphasize here. So the ERP systems helps the customers in avoiding such frauds. Now, series of correspondence and audit trail. So the clients should maintain, wherever clients are dealing with, especially overseas counterparties, including even domestic counterparties, they have to maintain the series of correspondence, and the audit trail should be available. So in this case, had the client maintained the series of correspondence right from the time the transaction was negotiated with the overseas vendor, and if he had placed in the audit trail of all the mails received, this fraud could have been avoided. This again can be through technology, or it can be also through manual processes, but technology helps in doing it faster. So these are the possible interventions. These are the possible interventions which the company can look into to avoid prevention of such cyber frauds. Now we'll come to the meaning of cyber frauds. What are the concepts relating to cyber frauds? Now let us understand one by one so that in the time allotted, we will understand what is the concepts, what is the significance of each and every concept that we need to look into. Now let us first understand the meaning of cyber frauds. So cyber frauds are nothing but, in simple terms, crimes committed via the internet, through the internet. We are now in the electronic age. Everywhere we see communications coming through electronic media. So wherever we talk about, just a second. So here, when we say crimes committed via the internet, these are nothing but cyber frauds with an intent. So what is the intention of the fraudster? He wants to legally acquire and leverage on the information. The fraudster, by emphasizing on the confidence that he puts into the client, the intention is to legally acquire and leverage on the sensitive information. And for what purpose? For monetary gains. So cyber fraud is nothing but crimes committed via the internet or any other electronic media with the intention is to acquire the sensitive business information, to leverage on the sensitive business information. It can be an individual's information or it can be even the business's information with the motive of monetary gain. And this is what we talk about as cyber frauds. Now, there are various typologies. It can be in any of the methods which are prevalent in the market today. First is phishing. Phishing is nothing but centering around malicious emails. Malicious emails from the fraudsters. The one which we looked into the case study, it was a malicious mail. It was an email coming from a fraudulent mail ID, posing themselves as the original mail ID of the vendor. So this is a phishing attack on the customer. It looks like legitimate correspondence because ABC John Dio @abccompany.com and John Dio @abcccompany.com looks almost legitimate. Not only that, sometimes they use the letters hyphen and dot. So here, John Dio @abccompany.com is the original genuine email ID. The fraudster uses John Dio @abc.company.com or abc-company.com. So this looks legitimate. And it is also giving an impression to the client that it is from a trusted correspondent. So phishing is that. Centers around malicious mails, looks as if it's a legitimate correspondence from the trusted correspondence. Fake invoices, attaching fake invoices with the change in the bank details. This is one of the examples of phishing attacks. And sometimes clients get mails for password renewals. A mail comes from a genuine source telling that your password expired. You have to create a new password. Click on the link below. So here, you can as well go to the website of the particular organization and change the password. Suppose if it's a bank, you can go as well to the website of the bank and change the password. But instead, if the client clicks on the link for renewing his password or presuming that this came from a genuine institution and he wants to update the password, then that becomes phishing. The fraudster will take hold of the system. Sometimes mails come from the leadership. Say, for example, the MD of a company addressing the employees through mails. So generally, there are mails coming from leadership on motivation. So some such mails, the fraudster take advantage of that and he poses as if he is the MD and he sends the mail to the employees. And if the employees feel that this mail has come from the leadership, they get targeted. So these are called as phishing attacks. And many a times, the mails carry links. the mails from the fraudster, they provide a link to update your personal information. Now, I'll just give a small example of this phishing attack. Say, for example, now this is a season of mangoes. And every wholesale dealer, he wants to sell mangoes through the websites. Now, today, when you talk about average price of a mango in today's context across the country, say per kg, it may be around 200 rupees or 250 rupees. Or if you go for Ratnagiri mangoes, it may be even more than that. Now, some of the fraudsters, they are using this channel. They are using the requirement of the customers and they are sending mails. They are telling, we sell mangoes at 99 rupees per kilo or 59 rupees per kilo. And they also provide you a link. To give your request, to indent, give your indent for how many kilos of mangoes you require. So there'll be a format which is projected as if it's the format from a mango wholesale dealer. And once you key in your details, your name, your mobile ID number, your email ID, and what is the quantity you require, and how do you like to make the payment. So there, they will not immediately ask you to make the payment via debit card or credit card. They'll first ask you how you would like to make the payment. And there you will say on delivery of the mangoes, or through debit card, or through credit card, or through net banking. But there'll be a small disclaimer. There'll be a disclaimer in the mail telling that first come, first served basis. That means this particular price he's quoting is on first come, first served basis until stock's lost. So now you are induced. So as a consumer, now you are not getting mangoes at 99 rupees per kg. When you go out to the market, it will be at least 250 rupees. So you want to take advantage of the price that is quoted. So immediately what you will do as a consumer, you will immediately say, I'll pay through net banking, or I'll pay through debit card, or I'll pay through credit card. So once you click that, you will be sharing your details and that gets confiscated. And the fraudster will take advantage of the information you have provided to them. And this is what is called as the phishing attacks. Now, what is phishing? Phishing, again, is one of the typologies in cyber frauds. And this is through voice. Phishing is also referred to as voice phishing. Phishing is through emails. Phishing is through the voice. So he'll call you. So here, it involves a call from the trusted firm, organization, bank, financial institution. So phishing is a telephonic call comes to you. I'll just give a small example how the fraudsters take advantage of the systems. Now presume you have applied for a credit card. You have applied for a credit card with a particular bank. Now, if there are chances that some of the fraudsters have the technique of getting information on customers who have applied for credit cards and where the credit cards have been generated by the banks. So maybe there is a internal fraudster within the bank or within the financial institution who may be involved in this fraud, because sometime back I told, as per the Europol, which is an enforcement agency in European Union, 37% of the cyber frauds happens internally within the internal stakeholders of an organization. So here, some of the internal fraudster knows that credit card has been generated. So now you will get a call. You will get a call as if it's from the bank. Now they will say that they are from so-and-so bank. They'll ask you whether you have applied for a credit card. Now you will say, yes, I have applied for the credit card. Now they will ask you whether you have received the credit card. Now you say, no, I have not received the credit card. But they say that we have already dispatched the credit card. It's already delivered to your address. And so has taken delivery of the card. They'll give some name. They'll say X in your house has taken delivery of the card. Now you immediately respond to them, telling that there is no X in my house. They will again tell you, no, X has taken delivery of the card. This is your address. But still you tell that X has not taken delivery of the card because there is no one by name X in my house. Now they will say, since you have already taken delivery of the card, if you want to complain, that means since as per the records, the card has already been taken delivery of, if you want to complain, you can register your complaint with us. Now what you will do? You will say, okay, let me do it. Then they will say, we are sending you a link against which you can register your complaint. And in that, they'll be asking you some personal information. And once you give this information, the fraudster has the capabilities to target your system, to target your information. So this is what we call as vishing. Now I'll give the second case. Coming to the same example, I'll give the second one, how it happens. Now the same, you have applied for a credit card. You have received a credit card. You have applied for the credit card. You have received credit card from the bank. Now the fraudster will call you the next day or basis the third day or the fourth day. Now the fraudster will call you posing themselves as from the bank. So they will say you had applied for a credit card from our bank. You have already received your credit card. Now the pins, the 4-digit pin number, they say that the 4-digit pin number has been delivered to your house. So has taken delivery of the 4-digit pin number. Have you got the pins? Now the customer will say, no, I have received my card, but I have not received my pins. They again emphasize that it has been taken delivery of by Mr. X in your house. Now you say that there is no person by name of Mr. X. Now they will just induce you. Suppose if you want to activate the card, because you have not received your PIN, as per our records, PIN has already been sent and somebody has taken delivery of this PIN. Forget about that. Now, if you are in urgency to activate your card, you can help us. You can tell us the details. We will activate the card for you. Now they will ask you to first read out the card number. Now they will take the card number. Then they will ask you to read out the name on the card. You will read out the name on the card. They'll ask you to call out the expiry date of the card. You will inform the expiry date of the card. Now what they have done, they have got 3 informations from you. Now they will say, we want your mobile number to share the PIN. A OTP will come on your mobile. You tell the OTP, card gets activated. Now you will give the mobile number. And once you give the mobile number, immediately you will get a OTP. Now you will share the OTP with the fraudster who is posing himself as the bank. And once you share the OTP, your card is used. Your card is rather misused. So he has got the card number. He has got the name on the card. He has got the expiry date on the card. But some of the fraudsters, they may even ask the CVV, which is behind the card. But some fraudsters intentionally, they will not ask. Because if they again ask the CVV, you may get doubt. So they may not ask the CVV. But once they ask your mobile number and you provide the mobile number to them, and once you get the OTP, and once you share the OTP with them, they are misusing this card. They are immediately swiping off the limit available on this card. And this again is a cyber fraud. So this is vishing. Now come to malware. Malware is a software that is designed to damage or disable your system, to steal personal information, and to delete files and gain control on your systems. So malware is a software, a fraudulent software rather, a fraudster designing a software wherein your system gets damaged, your system gets disabled. As a result of which, the fraudster is able to steal personal information, which is available on your database. And they have the capability to delete the files, thereby gaining control on your system. So this is one of the screenshots from McAfee. So many times, whenever you are operating your system, you get an alert from McAfee. They say that your system is now affected with virus. And you can protect your PC by subscribing. This is one of the genuine entities who are providing protection to your PC. So here, once you tell them you don't require this, you may tell don't require this. Or you may say, I want to go later. Okay. But many of the laptops, many of the desktops, which are sold by the leading reputed vendors, they always come with installation of the McAfee. And whenever it expires, they renew automatically. And when they renew automatically, you will get a message on your laptop or the desktop that this is renewed. And this is one of the reliable messages which has come from McAfee. They say that it is now protected. Your PC is protected. The virus and spyware protection is on. So it says that your McAfee antivirus and anti-spyware software is up to date and protecting your antiviruses, spyware, and other threats. Firewall protection is there, as well as McAfee web protection is there. That means they are telling your PC is protected. So always go for genuine and reputed brands when you buy a laptop or a desktop or any other gadgets, so that has the support from vendors for even scanning out the viruses in the system and also giving you both firewall protection as well as web protection. Now we come to ransomware. This again is one of the typologies used by fraudsters under cyber fraud. Ransomware is again malicious software. What this does is it encrypts a victim's file. Victim is the accused, the person who is now under the scanner of the scammer. So victim is the user using the laptop or the desktop. So it's a malicious software which encrypts the victim's file, and they'll come again to you only to decrypt that file, demanding payment. Say, for example, your system is now corrupt. So how it became corrupt? The fraudster encrypts your files. So the fraudster encrypts your files, makes it corrupt. And the same fraudster sends a message to you telling that we are leading vendors in decrypting the files which are corrupt. And they'll say, pay us, this is the charges we demand, this is the charges we levy for decrypting such files. And they demand payment to decrypt such files. And once they send the link for the payment, you carry out the instructions and your system is hacked. So they provide you malicious links or email attachments. And once you exercise or once you initiate your instructions based on the link he has provided or the email he has attached, your system is targeted. And this is what is called as ransomware. And never fall prey to such malicious mails coming from fraudulent vendors. Now we have another typology which is very, very popular in these days, social engineering. Almost all of us are on our social sites. We are very active on social sites. Can be a Facebook, Twitter, LinkedIn. So there are lots of social sites where we get engaged ourselves. And some of the fraudsters take advantage of that. Social engineering is nothing but taking advantage of the personal information available on the social sites. So as a user of social platform, I have provided some personal information, and this is taken advantage of by the fraudsters. So based on the personal information available, I take advantage. The fraudsters take advantage, and they know the individual emotions. So based on the data available on the social sites, the fraudster can analyze the individual emotions, and they appeal to an individual's emotions. I'll just give a small example. So there are, whenever you are working on a desktop or a laptop, you will get a flyer. So the flyer says, my daughter aged 6 months is diagnosed for so-and-so cancer. And the doctors have told that she should be immediately performed with an operation, which costs 25 lakhs. And I am a servant maid, or I am a person with meager salary. I want to save my daughter. And it says, please donate liberally. And this may be a genuine mail also. There are many times genuine mails coming like this. So here, the fraudster, based on the information available on the social media, he appeals to an individual's emotion. Okay, so now what the individual will do? Now, individual may be interested in helping this child. So you may give your indication that you want to contribute. So once you say, I would like to contribute, or once you give an indication to them that you are contributing, you need to provide the amount. So immediately their bank details will come. And once you take their bank details, you have to necessarily use either your debit card or the credit card or the net banking facility. Once you are using this, the data is manipulated. So you are giving your confidential information and the fraudster manipulates the data and he manipulates to his advantage. And this gives access to the personal accounts. This gives to the fraudster access to your personal accounts, as a result of which he can get advantage of, he can take advantage of. Because here, one of the models which these fraudsters play is they induce you based on your individual emotions, which they have analyzed on the data provided in the social sites. So they induce the individuals. Rather, they induce the firms also to reveal their information, like the bank account number, the credit card number. And if it's a firm, they will ask you for financial details. So this they take advantage of on the data shared by you to the fraudster. And this is social engineering, one of the typologies in cyber frauds. Now we have sometimes called spoofed transactions. Cyber frauds also take the form of spoofed transactions. So what is that? So here, the fraudster obtains personal information by projecting to you as if he is a legitimate business dealer with you. So many a times, you get calls. As a client, the client get calls from fraudster. They project as if they know the client very well. So they pretend to be a legitimate business relationship. So they pretend themselves, they pose themselves as some legitimate business relationship as if they know this client for the past so many years. So what is the use of this? They also sometimes pretend themselves as if they have existing relationships with the client. Or they also say, so-and-so have referred your name to me, so I wanted to speak to you. So here, the calls come to you, wherein the fraudster will pose to the customer as if he is a legitimate business relationship, or he is in the existing relationship with the client, or he refers to some known companies known to the client, telling that they referred me to you. So these are spoofed transactions. And once you share the information, or once you share your thoughts, once you start talking to them, they induce you, provide indirectly some of the informations which they are looking at. And once unintentionally you provide them such information, they may misuse such information for fraudulent tactics. And this is called spoofed transactions. Again, one of the typologies under cyber fraud, where the fraudsters can take advantage of either the existing relationship or legitimate business relationship, or sometimes through referrals. They come through some names. They say that so-and-so referred me to you for a business deal. So you get targeted. Now let us go to the second case study. So after having understood the various typologies under cyber frauds, we'll go to a second case study, which is very, very, mind-boggling fraud, and which also is very important in the context of the amount that is involved. Now, Bangladesh bank robbery. Many of you would be aware of this. This was in 2016. Overnight, the fraudsters hacked the system of the Central Bank of Bangladesh. So can you imagine, the system of the Central Bank of Bangladesh was hacked. And this was known as the Bangladesh bank robbery. So here, $1 million worth was siphoned off. Illegal transfer close to $1 million from the Nostro account maintained with Fed Reserve. So what is a Nostro account? So wherever any bank is dealing in foreign exchange transactions, any bank across the globe who are dealing in cross-border transactions, they need to maintain a Nostro account. They need to maintain a dollar account with the overseas US bank if they want to deal in dollars, or they need to maintain a sterling account with a UK bank in UK if they want to deal in sterling pounds. So Nostro account is a foreign currency account maintained by a bank in the home country with the bank in the host country. So here, Bangladeshi Bank, the Central Bank of Bangladesh, because they are dealing in dollars, currencies, for the dollar transactions, they have maintained Nostro account with the Federal Reserve Bank, Federal Bank of New York. Now, whenever there is a remittance, whenever there is an outward remittance or an inward remittance to the banks in foreign currency, that should come through Nostro account or that should go through Nostro account. And any instructions under the Nostro accounts or any instructions with regard to transactions happening with the Nostro accounts, that should be through the SWIFT platform. So many of you may be aware, SWIFT is nothing but a network. It's a platform which facilitates flow of financial messages between banks in case of cross-border transactions. So I'll just give a small example. Say, for example, now your client wants to remit, say, $1 million towards consultancy fees to the overseas service provider through a bank. Your client wants to remit $1 million to the overseas consultant for being services rendered by the overseas client. Now, when your client has to remit $1 million to the overseas client, it has to be through the bank in India only. And the bank in India should have a Nostro account in US dollars with a US bank. Presume your client has an account with ABC Bank in India, and ABC Bank has a dollar account with XYZ Bank in New York. Now, your client instructs your bank, ABC Bank, to debit his rupee account and to make an outward remittance for $1 million to the XYZ Bank. Now, the bank will debit your rupee account, your client's rupee account, and they will, at the applicable exchange rate, convert the rupees into dollars, and they have to make an outward remittance of $1 million to the overseas client of your client. Now, when the bank has to remit $1 million to the overseas client, that has to happen through the SWIFT network. That means the bank in India, ABC Bank in India, having maintained Nostro account with XYZ Bank in New York, they should have a SWIFT arrangement. So ABC Bank will transmit the SWIFT message. We call MT202. MT202 is bank-to-bank transfer. MT103 is customer-to-customer transfer. Now, ABC Bank in India will transmit a SWIFT message, a financial message, over the SWIFT platform to XYZ Bank in New York, giving instructions, you debit my account in dollars for $1 million on behalf of my client and credit the overseas party to whom my client is due for having rendered the consultancy services by the overseas client. So that is a SWIFT transmission. So for any transmission under SWIFT, there are 3 levels of approvals. So any message going from the SWIFT, any financial message going from one bank to another, in case of cross-border transactions, the SWIFT has 3 levels of approvals. The first is the user has to create the message. Second is the approver has to approve the message. And the third is the verifier has to verify the message. And all the 3 user levels are independent to each other. And only when the user, the approver, and the verifier have done each of their obligations, and once the message is verified by the final person, the verifier, the SWIFT message gets transmitted. So it has the robust support of 3 controls. The user creates the message, the approver approves the message, and the verifier verifies the message. They are the 3 levels of users under SWIFT. So when ABC Bank is remitting $1 million, giving instructions to the overseas bank, in ABC Bank, there is a user who creates the message, there is an approver who approves the message, and there is a verifier who verifies the message. And after the 3 levels of accessing, or after 3 levels of committing the transaction, the SWIFT gets transmitted to the overseas XYZ Bank. Now, at the XYZ Bank level, when they receive the message, they also have the decoding facility. That again is completely through verification. The maker, the checker, and the verifier. So that means this is one of the robust technologies under international cross-border transactions, bank-to-bank transfer. So here, what happened in this particular bank, the Bangladeshi bank, the hackers, overnight, they hacked the system of the SWIFT system of Bangladeshi bank. So what they did, they confiscated the entire server, and through the server, because these fraudsters were technically experts, through the server, they could get the user level authorization, the approval level authorization, and the verifier level authorization. And they started creating messages overnight in a span of a few minutes, and they siphoned off $1 million from the Nostro account of Bangladesh bank maintained with the Federal Reserve. Only when the next day morning, when they came to the banks, they note that their account is debited for almost close to $1 billion, and this was siphoned off to various destinations. So once they complained to the cyber crime authorities in that country, immediately they were able to locate. So here, 5 of the 35 fraudulent transactions. So they were able to succeed in transmitting 35 fraudulent instructions through the Swift message. See, as fraudsters, they'll be very technically smart. They never transmitted entire lot. They never transmitted the 1 billion amount in one single transaction. They used around 35 transactions. So they gave 35 instructions through the Swift message using the user level, approver level, and the verifier level passwords, and they siphoned off $1 billion. Now, of the 35 fraudulent instructions given by these fraudsters, okay, 20 million was siphoned off to Sri Lanka, and 81 million was siphoned off to Philippines. And this came to light only after investigations. Now, subsequently, once the first 5 transactions were investigated and found out, the Federal Reserve blocked the remaining 30 transactions, almost amounting to $850 million, because they raised suspicion. Because Federal Reserve closes when we are around 12:30 or 1 o'clock midnight. So Federal Reserve, the Inward Remittances Department in the Federal Reserve were able to notice something wrong happening. So 35 fraudulent instructions, all close to around $1 billion total amount. Though the first 5 transactions were transmitted, because these are all automatic transmissions, then they blocked the remaining 30 transactions, suspecting some foul play. And later it came to light that the system of this bank, the Swift system of this bank, was hacked by the fraudsters. So this is the case relating to the Bangladesh bank robbery, and this comes under cyber frauds. Now, what are the possible preventions? How we can intervene? How the banks can have their interventions to avoid such things? Now, whether tokens are generated for each and every system sent, Swift communication sent. So now today in the Indian context, now for that matter, many of you may be aware of the Nirav Modi scam. But there, in the Nirav Modi scam, the bank employee collided with another employee. See what happened in Nirav Modi scam? It was again transmission through Swift messages. But one person, he took hold of the other 2 authorizers' password and the login ID. So that means the manager who was heading the Forex department, he took control of the other 2 user levels. He created the message using the Swift ID and the Swift password of the user level. He approved the message using the approver's ID and the approver's password under Swift. And he also verified the message using his verifier's ID and the verifier's password. So all the three levels of the user ID and the passwords were under his control. So one single person, he created the message, used the user ID and password of the user. He approved the message using the approver ID and the approver's password. He verified the message using the verifier's ID and the verifier's password. So there were 3 different levels of approvals. It was done by the same person. And like that, he siphoned off the funds. But here, in the case of this particular cyber fraud, which we are looking into, maybe they would have used the same method also, same model also. But since they hacked the server itself, they were able to get details about the user level, the approver level, and the verifier level. Now, what is the possible solution to this? So today in the Indian banking context, or maybe rather across the globe, there are lots of controls put in place. Now here, whenever a SWIFT message is generated in today's context, so many of the participants in this program, you may be concurrent auditors in some of the banks where you are auditing their back office sections. You may be auditing their settlement transactions, or you may be auditing the centralized treasury also. So wherever you're concurrent auditors at the centralized level in many of the banks, now the SWIFT system, auditing of the SWIFT system is very, very important in today's context. So here, now today, whenever a user has to create a message on the SWIFT system, tokens are generated. The system generates the token, and the token is valid for a small time. Suppose, say, for example, A in a particular bank, he is the person who is authorized to create the message. B is the person who is authorized to approve the message, and C is the person who is authorized to verify the message. So there are 3 levels of users in the SWIFT. A is the authorizer to create the message. B is the authorizer to approve the message, and C is the authorizer to verify the message. And all these messages are created on the SWIFT network. So there is a system, the creator, the person who is creating the message, he has to log in into the SWIFT system. He should create the message and he'll come out. Then the approver, he will again log into the system, approve the message created, and he'll come out. And the verifier, again, he will log into the system, verify the message, and he will come out. So once he verifies the message and submit, the SWIFT gets transmitted. So that is the protocol. Now today, in today's context, when the creator, when the person who is called the user, first level user, when he wants to create a message, he has to go into the SWIFT platform, use his user ID and the password, and immediately the system generates a token. The technology is put in place where the system generates a token. And the token generated is valid for, say, a 3-minute period or a 4-minute period, within which time the user has to create the message. Suppose if the message creation takes more than 4 minutes, he can revalidate the token. He can extend the time. Okay. So once the token is generated, the message is created by the user, and the user completes the message and submits the message. Now the next, once the user has created the message and submitted the message, now the approver has to approve this message at a higher level. Now, when the approver goes into the SWIFT system, he logs in with his ID and the password. Again, a token is generated for the approver with a time stipulation. And within that allotted time, the approver has to approve the message and he has to submit the message. And once he approves and submits the message, he comes out of the transaction. Now, again, the verifier. Now, it goes and sits in the verifier queue. Now, the verifier has to log in with his ID and the password. And again, a token is generated. And once the token is generated, it carries a stipulated time. And within that time, the verifier has to verify the message and submit the message. Once the verifier submits the message and submits it, the transmission happens. That is, the overseas bank gets the instructions that the account has to be debited and payment has to be made to the overseas counterpart. So now, as a concurrent auditor, you need to look into at the bank level, wherever you are doing audit of back office transactions, to ensure whether tokens are generated for each and every SWIFT communication sent. Next is different user levels. So whenever there is a control put in place today under the instructions of Reserve Bank of India, that whenever the creator of the message is logging in into the system, a login is maintained. And whenever he logs out, a logout also is maintained. So different user levels are defined, and each of the user is an independent maker or a checker to another. That means when he logs into the system, the time audit trail is maintained. The login, logout into the system is automatically generated by the system itself. And this should be authorized and approved by the delegated authorities as per the bank's systems in place. That means if I am to log in as a user, the system generates the login register. And when I'm logging out, the system generates the logout. So the time span. Suppose if a user has taken, say, 30 minutes time. Now, as an approving authority or as a delegated authority, I need to question as to why it was 30 minutes. It may be a LC. The creator has to create a LC, letter of credit, which is a long document. It would have taken 30 minutes. So that audit trail is available to the delegated authorities. And that is again one of the controls put in place to avoid frauds like this. And very important, series of correspondence and audit trail. So this needs to be looked into. And very, very important, wherever SWIFT messages are sent towards financing, like for example, buyer's credit transactions, bill discounting transactions. So there are lots of transactions happening between the bank in India and bank abroad, wherein we are lending and borrowing in the interbank markets, cross-border lending and borrowing. So there, the lending and borrowing, the pricing happens through the SWIFT messages, through a secured SWIFT message platform. So here, the pricing, the confirmation from the lender or the borrower or the counterpart on pricing. What are the underlying documents available? Everything is available on the SWIFT platform. And this again has to be verified to ensure that there is no fraud. And sometimes foreign bank guarantees. So we also come across banks day in and day out issuing foreign bank guarantees or receiving foreign bank guarantees. So banks in India send outward guarantees, which we call foreign bank guarantees outward, and banks in India receive inward guarantees from the overseas correspondents. So this has to be routed through the CBS platform, the core banking solutions platform, because CBS supports the SWIFT foreign bank guarantees, whether inward or outward. So this again is one of the controls that has been put in place to avoid possible hackings of the systems. And Nostro debits. Maybe I'll just give you a small example for you to drive home the point of this concept. Maybe many of you would not have handled treasury audit, or some of you would have handled treasury audit. So what is a Nostro debit? Nostro account is, as I told earlier, a foreign currency account maintained by a bank in India with a bank abroad. So whenever the bank in India is sending an outward remittance, whenever the bank in India, like for example, in the example I gave earlier, ABC Bank, on behalf of the customer in India, they're making an outward remittance to the overseas consultant XYZ, $1 million. So when ABC is sending $1 million, sending is nothing but they had to give instructions over SWIFT to the Nostro correspondent, giving instructions to debit the dollar account of ABC Bank and credit to the consultant with his own bank. And that the account gets debited. So that is called the Nostro debit. So once my Nostro account, once the dollar account of ABC Bank gets debited today at this moment, the next day morning, when ABC Bank gets the statement of accounts, there is a debit in that account. So whenever the bank receives statement of accounts from the overseas Nostro correspondents, the back office will check each and every debit in the account and see whether these debits were instructed by ABC Bank. So tomorrow morning, when the reconciliation team, when the back office team of ABC Bank receives the Nostro statement from the overseas bank, they need to check whether whatever debits are there in the account, whether these debits are instructed by the bank in India, by their own bank, ABC Bank. And this is called reconciliation of Nostro accounts. Under no circumstances, the debit to the Nostro account, the debit in the statement of account should be left unreconciled, because the Bangladeshi fraud, which I told, the Bangladeshi fraud, which I narrated some time back, the Nostro debits were not reconciled within a span of 1-2 days. And once you reconcile the debits in the Nostro account, you will come to know whether the bank had given instructions for debiting this account. So as a concurrent auditor also, you need to cross-check. Whenever you are doing a concurrent audit of the dealing room or the treasury department or the back office department, you need to see what are the debits that are there in the Nostro account. And whether all these debits are followed by, all these debits are demonstrated by the instructions given by ABC Bank in India to their Nostro Bank overseas. And very important, You have to check it on real-time basis. Because now, say for example, you are doing audit at 3 o'clock in the afternoon. You are doing the concurrent audit of the back office. At 3 o'clock, suddenly there is a debit in the Nostro account for say $1 million. So the back office will immediately check from their side whether for this $1 million debit which has happened to their account, whether there is a authority given by the bank, any of the departments of the bank. So sometimes the instructions are given by Trade Finance Center, instructions are given by the dealing room, instructions are given by the credit department to the overseas correspondent. So here the back office will check whether the debit that is now happening into their account, whether there were instructions demonstrating that this debit should happen. Because all the back offices of all the banks across the globe, they have the account statement which they can view online basis. And as a concurrent auditor, you also should be satisfied that whatever debit is there in the Nostro account of the bank, that is demonstrated through the instruction given by the bank to the overseas correspondent. Now we'll come to the final phase of today's program, the RBI draft guidelines. RBI has released draft guidelines on cyber security prevention. So the draft guidelines are available on RBI site also. And RBI has called for the views and the feedback from both the banks and the stakeholders who are involved in cyber activities. So let us go through some of the important concepts relating to this. Now, formulation of information security policies. So RBI has put in the draft guidelines that all the banks, all the financial institutions, and all the organizations which are involved in these type of activities, they have to formulate an information security policy. So they have to prepare a crisis management plan. They have to also undertake surprise inspections. They also should ensure covering all the applications and products in their policy. So the information security policy formulated by the banks should capture the crisis management plans. They have to undertake a cyber risk assessment, and they also have to cover all the aspects of all the applications they are using and all the products they are using. And here, defining KRIs, key risk indicators, have to be defined in the policy, and this should be renewed annually. All the banks and financial institutions should have an information security policy, which should be defining the key risk indicators. It also should indicate what are the exercises that needs to be carried out by the banks and the financial institutions whenever they're introducing new products, and such policies have to be reviewed annually. And wherever any fraud is detected, wherever any cyber fraud is detected by the bank or the financial institutions, they need to report the matter to RBI within 6 hours. So these are the draft guidelines. These are the draft guidelines emanating from RBI. And once RBI finalizes, based on the feedback received from the stakeholders, there will be a communication to all the banks by way of a master direction or a notification or a circular. So one is formulation of information security factors, policies, defining KRIs, reviewing the policy annually, reporting to RBI within 6 hours from the time the fraud is detected. And RBI also has put in place in the draft guidelines the multi-factor authentication for all payment transactions. Wherever there are payments happening through systems, through internets, wherever there are payments happening through technology, there should be a multi-factor authentication, be it RTGS, be it NEFT through mobile banking, or be it through digital banking products, or be it through internet banking. So there should be a multi-factor authentication for payment transactions. So today, many of us, we get multi-factor authentication, two-factor authentication. One is they will ask for the OTP, and this OTP will be sent both on the mobile as well as on the email ID. Or sometimes they ask you for the OTP, and again they ask you for confirmation through the mail also. So this is called a two-factor authentication or a multi-factor authentication. Now, next is RBI also has put in draft guidelines, nodal officers. All the banks and financial institutions should have a nodal officer working 24/7, who should liaise up with customers on fraudulent transactions. And they also should liaise up with legal enforcing authorities. And this is a 24/7 department. Say, for example, midnight, 12 o'clock, you as a customer of a bank, you get a alert on the mobile. You get a alert on your mobile. We have received a transaction for, say, 50,000 rupees. Please confirm in case if you have not given any instructions. So that means at midnight, 12 o'clock, you are seeing the message that there's a transaction which is generated in your account for 50,000 rupees. And the bank is sending you an alert that in case if you have not done this transaction or if you have not initiated this transaction, please click on the link or please call that toll-free number. So that is nothing but giving you an alert. Now, at that time, what you will do? So the nodal officer has to liaise up with customers. The customer, once you call up on that toll-free number or once you click on the link given by the bank, the nodal officer will call you and liaise up with you to ensure that this will not be processed further in case if it's a fraudulent transaction. Now, immediate responsive system along with post-incident analysis, including forensic analysis, should be happening. So RBI has put in the guidelines that the nodal officer, once he comes to know that there's a target on the customer's systems, or once they come to know that there's a target on the organization or the institution or the customer's platforms, immediate responses, along with the post-incident analysis. A note has to be put up to the higher authorities, and wherever it warrants forensic analysis, that also needs to be put in place. Now, all the banks and financial institutions should have business continuity plans on different types of cyber threat attacks. Now, I told you sometime back an incident where the customer gets a call, the client gets a call that your credit card is dispatched. Client says, yes, I have received a credit card. Now, the fraudster says your PIN number also is dispatched and it has been delivered to X. Now, the customer refuses. The client says, there is nobody by name X in my house. Okay, now this has to be reported. The client has to report this to the nodal officer, and the nodal officer should take it to the logical end, including post-incident analysis and also, if required, forensic analysis. And a business continuity plan has to be kept on place, including the various systems on different types of cyber attacks. Now, access management. RBI also has a guideline that the principles like need to have. Who are the people who should have access to the bank's control systems? Or who are the people who should know the access systems for the bank's controls? So access management is nothing but who should have access to the bank's control systems and who should need to know as to who are the people who have access to bank systems. That again is one of the very important points brought out in this draft guidance. Access management, need to have principle and need to know principle. Likewise, when we talk about the cyber systems, when we talk about the IT systems in the banks or in the financial institutions, there are administrators' accounts. So these are called privileged accounts because they have all the powers. The IT chief, the chief technical officer, the chief technological officer, or the IT officer of the bank. So they are called the administrators. So they are privileged accounts in the IT system and they have all the powers. Again, here, there should be multi-factor authentication and these administrators' accounts should have a rotation policy. Suppose if A is the administrator today, tomorrow it should be B. Day after it should be C. Wednesday again it should be A. And again, they should have multiple factor authentication, two-factor authentication. Now, security controls. So RBI also has put in the draft guidelines that wherever the stakeholders in the bank, the employees, they are using smartphones, they are using laptops, they are again doing work from home. So adequate security controls should be put in place. And this can be even for organizations, very big corporates. So maybe many of you are chartered accountants being statutory for very big corporates. You can suggest them. Security control should be put in place for the use of portable devices. Now, maintaining network security, again, is one of the very important points. And tokens, generation of tokens. I told some time back, under the SWIFT system, tokens are very important. Likewise, even transaction-wise, within the banks, within the organizations, within the financial institutions, whether it's a big corporate or a small corporate, they can have a technology in place wherein tokens can be generated for various financial messages, multi-layered boundary defenses. So this will help a healthy way of doing financial transactions. Thereby, the corporate or the company or the firm or the bank or the financial institutions may not be targeted by the fraudsters. Now, security testing. So at least at periodical intervals, the banks, financial institutions, and the various corporates should have security testing through qualified agencies. Again, RBI has put in the draft guidelines that all the banks and financial institutions, including payment system operators, including aggregators, they should have security testing through qualified agencies. Now, coming to payment transactions, what are the draft guidelines put in place by RBI for which feedback may be given by various stakeholders before 30th June? Online alerts for customer-based transactions. Of course, today we are getting, many of the banks have put in place online alerts. So whenever you are doing a transaction, either at a merchant location, or you are doing on internet banking, or you are not doing on third-party websites, you will get an online alert on your mobile. In case if you have not done the transaction, you need to inform the bank. So these online transactions are already there, but RBI is emphasizing through the draft guidelines that there should be online transactions, online alerts for customer-based transactions regarding what? Failed transactions. If the transaction fails, now I go to the ATM, the transaction fails. So immediately you will get an online alert on your mobile. So that is what is the essence of this. Second is transaction velocity. So depending on the number of transactions you do, volume of transactions. So wherever the velocity of the transaction is higher, you get an alert on your mobile, thereby alerting you. In case if you have not handled these transactions, there are chances that some fraudster has targeted your system. Third is excessive activity. Sometimes for the past 1 year, I've been transacting, say the total number of debits in my account for the past 1 year, whether my account is a firm or a company or an individual. Presume my total account of number of transactions in the last 1 year, say for example, 20. Now this year, in the second 2 months itself, in the first 2 months itself, it has crossed 100. That means excessive activity. So wherever the system recognizes based on the last year's transactions, the transactions this time has increased leaps and bounds, then alert has to be generated on the customer's mobile. Geolocation. I'm located in Bangalore, but the transaction happens in Delhi location. Or I'm located in Delhi, the transaction happens in Frankfurt. So this again is an alert. Very, very sensitive in nature. Many of the fraudsters today, they do transactions globally. They defraud the customers globally. You may have an account in Bangalore, but your credit card will be used in Frankfurt. You have a credit card with you, but your credit card has been used in Frankfurt. So here the system has to generate necessary alerts on the customer's mobile. Transactions to virtual payment applications. So there are certain phishing frauds where the bank is aware that these are the companies on whom frauds have been registered. So the bank has to maintain a database of those where phishing frauds are registered, and they have to stop further happening of transactions on this. Now, masking account numbers. Whenever the bank is sending mails, whenever bank is sending alerts, or whenever bank is sending messages either through SMS or through WhatsApp messages, RBI draft guidelines says that the account numbers have to be masked. The card numbers have to be masked so that the fraudsters will not take advantage of this thing. Now, merchant name should be shown on all the transactions. Wherever you are getting intimation that you have used the card at a merchant location, you have already used the card, you should get a message on the mobile, including the name of the merchant. OTP at the end of the message should be given. So wherever you are getting an OTP, the RBI draft guideline says that OTP should not be at the beginning. First, the message should be provided on the mobile and followed by the OTP at the end of the message. Because when OTP is given in the first instance, the fraudster who is taking advantage of the system may immediately take the OTP. Easy reporting of transactions. Wherever a customer has to report cyber frauds, the procedure should be very easy. Click the link below or click the mobile below so that the customer immediately can report the transaction without any hassles. And terminating the sessions with interference or activity. As a user, whenever you are using your laptop or a desktop, say you are using internet banking, the session should automatically terminate if there is an inactivity on the system, or if there is an interference with your system during the course of your job, the session should terminate immediately because the system recognizes there is some intervention from a third party happening, or the system is inactive. Maybe the fraudster is thinking of various other models to do a fraud. So that means the system recognizes there is something happening there, either intervention through a third party or inactivity of the system, in which case the session terminates immediately, so that it will again instigate the original user to log in and again come into the system. Maximum number of failed login attempts. So sometimes it happens, I go to the ATM, I insert my card, but the PIN I have created first time is wrong. I am a genuine customer. The PIN I have given is wrong. Maybe I could not recollect the PIN immediately. So likewise, when I'm trying 1-2 times, it will help me. But if I'm trying many times, the system will immediately hang out. That means the ATM will not allow you further. It will block the card, or sometimes it may even confiscate the card. So that again is one of the draft guidelines under cyber security. Cooling period. Wherever you are changing your email ID and wherever you are changing your mobile number, wherever you are changing your email ID or wherever you are changing your mobile number, there is a cooling period as per the protocol. So RBI guideline says that wherever there is a change in the mobile number of the customer is changing his mobile number, or the customer is changing his email ID, allow it to cooling period, say 24 hours. You cannot transact for the next 24 hours. Or even if you want to transact, the maximum amount is only this much. Because this is a control put in place to ensure that frauds can be minimized. The cyber frauds can be minimized. Now we come to the last slide. What are the key takeaways? So whenever we talk about the takeaways, keep your software and devices up to date. All devices which you are using, whether in your firm or in your bank or in your organization, or even as a personal user, that should be equipped with antivirus, malware protection software. And always use unique passwords for your accounts and use different passwords for your accounts. And always have a system in place for two-factor authentication, and always back up the data. Either you can store the data on the cloud, or you can use an external device. So this comes to the end of my session. So now I leave the floor open to the participants. In case if there are any questions, you can please read out the questions. I can share the thoughts, and I give my contact details. Wherever you feel you want to share the complexities you have come across in this subject, you can send an email to me so that we can interact and see that this will be a continuous learning exercise. I'll stop sharing. Now I leave the platform open to know whether there are any questions.
What a wonderful and knowledgeable session, sir. No words can justify the gratitude and thankfulness for enlightening the participants today. Rightly highlighted by you about the various typologies of cyber frauds and RBI's draft guidelines, which must be thoroughly understood to detect and prevent these cyber frauds. Also, the detailed knowledge imparted through various case studies was also commendable. I've checked the chat box also if there are any queries, but there are no queries as such because the concepts were clear by you. And it's only the feedback about the session, which is mainly good, that the session was really good and we could have a thorough knowledge about the detailed knowledge about the concepts of cyber frauds. So thank you so much, sir, for
Thank you.
imparting this knowledge. And on behalf of the Digital Accounting and Assurance Board and all the participants, I express my sincere thanks to you, sir, for sparing your valuable time and imparting this knowledge to all the members today. Thank you so much, sir.
Thank you.
And there's one query in the chat box, which is you can share this PPT with the participants.
Okay.
And
I
also
will
the
share the
contact details. Yes,
yeah,
sir.
I will share the PDF copy of the PPT
Sure, sir.
to the coordinator
Yeah.
so
Oh,
that you can share with the participants.
sure, sir. Yeah.
Okay.
Yeah. Thank you
Okay.
so much, sir,
Thank
for
you.
such a wonderful
Okay.
session.
Thank you. Thank you very much.